Trump's new tariffs, a risky gamble with global trade. President Donald Trump's recent imposition of sweeping tariffs marks a significant escalation in his protectionist trade agenda. By implementing a 10% baseline tariff on all imports and imposing higher rates on specific countries, such as 34% on China, 24% on Japan, and 20% on the European Union, Trump aims to rectify perceived trade imbalances and bolster domestic industries. However, this aggressive strategy risks igniting a global trade war, straining international alliances, and imposing substantial economic costs on American consumers and businesses. Economic repercussions. The immediate aftermath of the tariff announcement has been tumultuous. Major U.S. stock indices experienced their worst day in 5 years, erasing trillions in market value and reflecting deep investor anxiety. Economists warn that these tariffs could lead to a 2.3% rise in consumer prices, costing the average American household an additional $3,800 annually. Furthermore, projections indicate a potential decline in U.S. economic growth by nearly a percentage point, underscoring the far-reaching implications of these trade barriers. Strained international relations. The global response has been swift and severe. Key allies, including Australia, Japan, and the European Union, have condemned the tariffs, with several nations pledging retaliatory measures. China has labelled the move as protectionist and vowed to defend its interests, raising the spectre of a prolonged trade conflict. These developments threaten to unravel decades of international cooperation and could lead to a fragmentation of the global trading system. Impact on domestic industries. While the administration touts these tariffs as a means to protect American jobs, the reality may be more complex. Industries reliant on imported materials, such as automotive and consumer goods sectors, face increased production costs that could lead to higher prices for consumers and potential job losses. Trade groups and labor unions have voiced concerns about supply chain disruptions and the overall competitiveness of U.S. manufacturing. Conclusion: President Trump's new tariff regime represents a high-stakes gamble with the U.S. economy and its position in the global market. While the intention to protect domestic industries and reduce trade deficits is clear, the approach risks significant economic fallout, both domestically and internationally. A more nuanced strategy that addresses unfair trade practices without alienating allies or burdening consumers might better serve America's long-term economic interests.